Once a scrappy Fairchild spin-off in 1969, AMD, Advanced Micro Devices, has gone from making memory and logic chips to squarely challenging Intel and Nvidia on the global stage. Through the 1970s and 80s, AMD hung around Intel's sidelines in x86 CPUs. It saw highs, Athlon and Opteron gave it market share swings in the 2000s, and lows, mid-2010s brought sales slumps against Intel. Enter CEO Lisa Su in 2014. She turbocharged AMD's turnaround. Under Su, AMD introduced the Zen architecture, unleashing Ryzen desktop processors and EPYC server chips that finally let AMD punch at Intel's belt buckle. By 2024, AMD was celebrating record sales, $25.8 billion for the year with non-GAAP gross margins around 53%, and data center revenue, nearly doubled, to about $8 billion as customers gobbled up its EPYC CPUs and Instinct GPUs. Su herself called 2024 transformative, and CFO Jean Hu noted that AMD closed the year with accelerated earnings expansion, while investing heavily in AI and innovation. In short, the underdog had become a genuine heavyweight in chips. Margins and money. Why gross margin trumps bling. Despite all that top-line growth, Wall Street is watching one metric like a hawk: gross margin, the percentage of revenue AMD keeps after paying chip fabrication costs. Why care? Think of gross margin like a car's fuel efficiency. Higher margins mean AMD retains more bang per sales dollar, funding profit, R&D, and dividends. In Q1 2025, AMD actually delivered a solid 54% non-GAAP gross margin, in line with expectations. But the company's guidance for Q2 blew a hole in that metric. Management forecast only 43% adjusted gross margin for Q2, reflecting about $800 million in inventory charges due to new export restrictions. In effect, AMD warned it would keep only 43 cents of every sales dollar as gross profit, or 54 cents excluding the one-time hit. That's far below the mid-50% range analysts assume, and it matters because a drop like that can eat sharply into net profit. In plain terms, AMD's upcoming deals or price cuts mean less profit per chip, a big deal for a stock that's prized for its efficiency. Clients and data centers, engines roaring. There's good news on other fronts. AMD's client and data center businesses have been roaring ahead. In Q1 2025, AMD reported client, PC, revenue up 68% YoY, thanks to new Zen 5 desktop CPUs and laptops, and data center revenue up 57%, fueled by EPYC CPUs and some GPU demand. Lisa Su called it an outstanding start to 2025, with growth driven by expanding data center and AI momentum. On the earnings call, she emphasized that AMD's data center AI arm was increasing by a significant double-digit percentage year-over-year, as MI325X shipments ramped to support new enterprise and cloud deployments. Over 35 of AMD's MI300 series GPU platforms are already in production at major cloud providers. In other words, hyperscalers are adopting AMD's chips, and the product pipeline, new Venice and Turin EPYCs, MI325X GPUs, etc., is full speed ahead. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me. Hit the subscribe button, turn on the notifications bell, and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. AI flatline in H1 2025. There's a hitch, though. AI chip revenues didn't grow in H1 2025 like many had hoped. Despite killer PC and server sales, AMD bluntly told investors that revenue from the AI chips will be similar to where it was in the second half of 2024. Translation: no growth in AI accelerators for the first half of 2025. Basically a flat line after the 2024 rally. That caught people off guard. Analysts feared exactly this, air pocket, because AMD is in the middle of a GPU generation shift. Data from Q4 and Q1 hinted at this. while total data center sales jumped 69% in Q4 and 57% in Q1. The company simultaneously said its upcoming MI300 series shipments would only keep revenues level. In short, AMD's non-GPU segments, servers and PCs, are booming, but its AI/GPU piece is cruising, not climbing. Wall Street expected AI revenues to keep roaring, driven by AI spending, so this pause was a bit of a reality check. China curbs the trade tussle. Why the AI stall? A big culprit is global politics. In April 2025, the US imposed strict export controls on high-end AI chips headed to China. AMD's most advanced accelerators, the Instinct MI300 family, now need special licenses for China, effectively blocking a chunk of the market. CFO Jean Hu warned these restrictions will cost AMD about $1.5 billion in 2025 revenue. Indeed, AMD's guidance reflects that hit. It expects roughly a $700 million revenue reduction in Q2 due to lost China sales, and it's booking $800 million in charges for unsold inventory. Think of it as demand getting pulled forward, customers stocking up early, and then paused. This China ban also shows up in AMD's financials as lower gross margin. We saw the inventory charge, and weaker AI sales. Still, AMD insists this is a manageable headwind. Su stressed that the AI market's underlying demand is strong and that AMD's AI pipeline, MI325X, MI350X, MI400 series on the horizon, will ride the tailwinds once the dust settles. GPUs to go, big bets ahead. The tough export rules and flat early 2025 AI sales mean AMD's bold AI GPU targets now require a lot of catch-up. AMD has talked about tens of billions in AI revenue in the next couple of years. Even some analysts were modeling $10 billion of AMD AI chip sales for 2025. For context, AMD only did roughly $5 billion in GPU/server sales in 2024. In other words, meeting those targets will require the new MI300 series and beyond to sell like hotcakes. This year AMD is counting on ramps of MI325X, MI350X and the future MI400 chips. If these chips don't launch fast or sell well, AMD could miss its ambitious growth plans. Compare that to NVIDIA's narrative. NVIDIA is still the 800-pound gorilla of AI silicon. It rakes in north of $100 billion a year from GPUs, many times AMD's AI revenue. An analyst's estimate NVIDIA holds 80% of the AI accelerator market. AMD is the plucky challenger learning to box with gloves on. If its GPUs can gain share, and its software/software ecosystem improves, then the projection of tens of billions might pan out. But it's a race, and NVIDIA still has the bigger head start. Counting cents, EPS, and the bottom line. So how did AMD actually do on the bottom line? The earnings report had some relief. Q1 adjusted earnings per share, EPS, was 96 cents, a bit above the 94 cents consensus. In plain terms, that means AMD was slightly more profitable than Wall Street expected, which gave investors a jolt of confidence even amid the uncertainties. High EPS growth, around plus 50% YOY, showed AMD's operations still ran efficiently. To quote Nasdaq's summary, AMD turned in great first quarter results and saw EPS growth more robust than revenue growth. In layperson's terms, they're squeezing more profit out of each dollar of sales, the opposite of what happens if margins collapse. This EPS beat was partly why AMD's stock rallied on earnings day, despite the DAR guidance. It's a reminder that even when growth wobbles, exports AI profits can hold up if costs are controlled. $1.5 billion headwind, $7.4 billion quarter. Can it handle both? One eye-popping data point from the call, AMD reiterated that 2025 revenue will be about $1.5 billion lower than it otherwise would have been, all thanks to the China AI chip ban. They predicted a flat $7.4 billion in Q2 sales, down $700 million from original plans, to reflect those lost China orders. It sounds grim, but here's the kicker: AMD's immediate results were still solid. They front-loaded Q2 bookings, hyperscalers bought early rather than risk future denials. As a result, Q1 revenue and EPS still beat forecasts. It's like taking a one-quarter hit to avoid a two-quarter drought. In fact, going into Q2, AMD's $7.4 billion forecast actually topped the $7.24 billion consensus, even with that China hit built in. So in the short run, the business stayed on track. Long term, though, the missing $1.5 billion is real money. It's about 5% of AMD's expected 2025 haul, so investors can't ignore it. For now, the company argues these hiccups are known and well contained, but it's a factor to watch as 2025 plays out. If we fully obey the Lord, the Creator of heaven and earth, and carefully follow all His commandments, He has promised to set us high above all the nations of the earth. Deuteronomy 28. We shall be blessed when we come in and when we go out. I appeal to you to accept God and let Him be your guide, for He will never leave you nor forsake you. Do not be afraid, do not be discouraged. Deuteronomy 31 verse 8. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful content. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Faith and prayer will do what no power on earth can accomplish. See you in the next video by God's mercy.